Hello traders, welcome to the weekly outlook and setups volume 299. We gotta get this to 300. As usual, Iliya here. You know what we're gonna be doing, having a look at the markets, how they developed this week, what kind of setups we had, and most importantly, try to draw some forecasts for what we can expect for the upcoming week. Now, I was away for 2 weeks. Thank you for all the messages seeking me out. I took a little break and I was also working on something incredible for you that I'm just gonna show you in a second. So without further ado, let us have a look at the economic calendar and then jump into the technicals. So we're coming in fresh after NFP. That was an extremely weak result that really sent the dollar absolutely dumping. And pretty much going into next week on Monday, we do not have news, but usually the Monday after NFP, it tends to be volatile. So we could definitely expect the movement on Monday. Tuesday, nothing, some Swiss franc speech. Then here Wednesday, Swiss franc speech and USD PPI, extremely important. Then going on to Thursday, we're having monetary policy for the euro, keeping the rate the same. So probably not going to be extremely volatile. Probably the press, are they going to have a press conference? Yeah, a little bit later. That is usually when the market gets volatile, in the press conference, depending on what the chair is going to say. But then, of course, the absolute highlight of this week, US CPI. Absolutely key, paired with unemployment claims. So Wednesday, Thursday look like pretty good days, and then Friday also we have GDP for the pound if you're looking to trade it in London session, and then also these preliminary consumer sentiment and inflation expectations. They are really good if you're trading index futures, for example. This is 10 a.m. Eastern. That is when the market really starts moving, so it's always good to have a news release at that time. So looking pretty good. Of course, PPI and CPI, we're definitely going to be waiting for that. But anyway, I'm showing up in the market every single day, flowing with it, I mean. So I don't care that much about the news. But of course, before the news release, I'm always extremely mindful. And I always prefer for those news releases, especially the big ones, to pass. And then, of course, I'm going to be jumping into the market. Fanatics, I spent 1.5 months putting together the Fanatic Bootcamp that is designed to help you exit the break-even stage with just 2 simple tools and 6 hours of content. Now, if you have been loving how I analyze the market in the weekly outlook, if you have been loving how I trade and how I think about the market, this is really going to show you everything that I do for an extremely small price. So we're going to be working on your mindset first, fixing your mindset, your limiting beliefs, and exiting your emotional cycles. Then I'm going to be giving you the 2 tools that I use, only 2 tools, so you're going to actually know what I'm doing in these weekly outlooks. And then, of course, I'm going to give you the process and the mechanics for it so you can actually build it into a trading plan. So if you're interested, first link in the description, click on it, and I'm going to see you on the other side. Alright, as usual, we're gonna get started with the Dixie. Now, looking at the weekly time frame, it is an incredible chop. Like, looking at all those weekly candles right now, we're having 5 weekly candles that are staying inside this weekly candle that was kind of the end of July, okay? We haven't broken out anywhere. So an absolute chop on the weekly time frame, which what is gonna immediately mean is that the daily is gonna be chopping and the 4-hourly time frame is gonna be just ranging, okay? Now, what can I extract from the weekly time frame? Nothing much, right? We came into sweep here, a little bit of liquidity, and we rejected, but we're also having a very big rejection on top. I'm seeing that the wicks are kind of descending, which means that we're probably going to be having a little bit of more of a bearish market structure, but nothing that I can really take from the weekly, apart, for example, from this liquidity points, that if the market actually decides to go bearish, that is going to be my next target. But yeah, dropping into the daily, oof. What a chop. So yeah, I haven't really traded the DXY or EU or JU in a while because I only trade gold right now, but what a chop right here. So basically, I'm only going to be looking right now at what is going to be happening right now, because what's happened before, honestly, my community absolutely killed it. I can show you some of their trades in this choppy market, because we know where the market is going to go next potentially, and just targeting liquidity down, liquidity up, liquidity down, liquidity up, because when you're having these choppy markets, the market just tends to go from liquidity to liquidity, right? And if you want to learn how to do that, make sure to check out the bootcamp that I just released. It's the first link in the bio. So let's check it out. We had here a daily bullish imbalance that the market created. However, right now we are, we're massively, come on, what am I doing here? Let's fix that text. All right, daily. We are massively dumping and we're also attacking this liquidity point. So that is a more relevant one because that one I drew was already taken. Then from there, we took the longs, and then from there, short started to kick in. Now, again, as I always say, sometimes we have to wait for Monday to pan out. And I would, in this case, say it again because this Friday candle was a massive expansion candle on NFP. And what I would really love to see if there is going to be a new daily bearish imbalance to be created on Monday, so then I can trade it on Tuesday, okay? And then towards the lows. So that is going to be my ideal scenario, okay, waiting for a daily bearish imbalance. However, then we immediately drop to the volatile time frame and we can see the market is already starting to dump and we're already having that market structure shift formation here, okay? We're having that high, the market tried to make a higher low, but then that failed to make a higher high, making a lower high, and then we have a lower low. So that is how I currently use structure on a very fundamental basis. And then of course I can zoom out and we can overall see like the market is descending. It keeps kind of sweeping the lows, but it keeps breaking lows. It's making lower lows and it's not making higher highs, right? It's not breaking above that high. It's not breaking above that high. It's not breaking above these highs. So to me, sellers are still in control. And then I drop to the volatile time frame and I also have this beautiful volatile bearish imbalance. Now, if that was a normal day, I would immediately look for shorts from here. So pretty much I can give you two scenarios in that case. I would say I am definitely more bearish. However, in the current market conditions, I have absolutely zero expectations. I never say where the market's gonna go. I just do it the easy way. I show up, I see where the market's guiding me, and I trade with that. All right, it's that easy. So volatile bearish, we can potentially continue going lower from here. The low hanging fruit is going to be that very recent low. And the other scenario will be for the market to tap into that volatile time frame, but not do much, and then pull us back into the daily, and then from there potentially give us the flush, okay? But for that, we need to really see if Monday is going to create a daily bearish imbalance. And then if that happens, it could get interesting. Okay, so that is the DXY. Definitely bearish bias. I think with the very weak jobs data we got last Friday, the momentum is going to be pretty bearish. We're seeing, for example, gold starting to climb again all-time highs, which means that the dollar is just not attractive at all. So I'm overall bearish on the dollar, looking to either short from this flower or waiting for a daily time frame to form and then shorting it from there. So let's see how it's going to play out, and let's see how the rest of the pairs are looking and if they support this sort of bias. Let's have a look at EU. I mean, it's the same situation here. We are still stuck inside this massive weekly candle and no really commitments anywhere. Now, again, we can go to the daily time frame right now to explore a little bit deeper what is happening. And it's again an absolute consolidation. But again, this kind of price action is also not that bad. Because again, it can take out that high, and if it doesn't make an imbalance, then of course it's gonna go and take out the weak low here, and then it doesn't make an imbalance, then it's gonna go and take out that weak high, and then if this doesn't make an imbalance right now, it can probably come back and take out this low. So again, it's all about flowing with the market and really seeing if there is momentum, because we didn't have any momentum here, right? Now, this Friday candle, extremely interesting. Now it's coming into a very big sweep area once again. This high here is very important, and then of course above that, we have this one, and then of course, just on top of that, we have that one. So if we prevail on the buy side, these are going to be my ultimate targets. Now, of course, what I would say is that I really want to see a daily bullish imbalance to be created. Okay, so in order for that to happen, we need to wait for Monday to close. Okay, so for the Monday candle to open and to close, and then we're going to see if we have a daily bullish imbalance. And if we do have that, then that is going to give me a bit more confidence for the longs. Because even if you zoom out again a little bit in terms of structure, it's kind of a little bit mixed up. Here from the left, we kind of had also that MSS pattern here where the market tried to make a higher low, tried to push, but it failed and made the lower low. Okay, but then we don't see the lower high here. All right, the market is not pushing down, and what we see recently is happening is we're starting to slowly ascend. Okay, so in terms of structure, it's kind of starting to look a little bit bullish. I just don't see the imbalances yet, and I kind of look at structure a little bit more behind the imbalances. So I'm first gonna look for momentum, and if there is momentum, then I'm gonna consult with structure, and they're usually gonna align. But right now I look at structure in order to potentially gauge, all right, who is more in control. Okay, but honestly, like, just zoom out a little bit. What we see here, massive consolidation. Are there trades? Absolutely. All right, my community took a lot of trades, and I mean, if you can flow, for example, with the flower, there is a short here. right? Then there was a long here, then there is a long here, right? And then there was a beautiful short right here into the liquidity, and then there were some long here, right? And then after that SWIP got taken, there was also long here. If you understand like the market there, you can definitely trade into these consolidations, okay? But for that, we have our specialist trading plan, which is more of a scalping trading plan. If you look to trade, for example, the hard time frames, you would better stick to the hourly and the daily and look for those clear setups. Now, right now, we had that very beautiful pop from NFP. We're creating a hourly bullish imbalance here, and the market is also just tapping it. So again, the very key question is, how are we going to react from that hourly zone? We have to also drop to the 1 hour time frame because we're getting with a lot of bearishness in here, right? So you can, like, this is how I would approach the market if it was live, okay? So hourly is tapped, 1 hour is bearish, then I will just wait to see if the market is going to fail the 1 hour, is it going to fail the 4 hour, and I'm just going to flow with it, okay? Because it's going to tap here, react, break, and then I'm going to be trading when there is absolutely nothing to stop price towards these liquidity points, okay? That's how I trade. Now, too early to say though, because Monday can open up with a crazy gap down there, and then of course everything is going to change. But again, similar to the DXY, I have potentially two scenarios. The market tapping into that hourly time frame and giving me the longs towards, of course, low-hanging fruit number 1, and then of course liquidity number 2, or potentially again maybe consolidating a little bit, coming deeper into that, consolidating, then tapping into the daily, and then still going higher. Now, I'm giving you a little bit more of a one-sided bias here, which again, if you have been watching my weekly outlooks, you know that I always give you two pretty much opposing scenarios, because you should never have one-sided bias, because that is gonna blind you to the other side. Because imagine that right now the market breaks that hourly time frame and invalidates a daily imbalance, okay, and prints a hourly bearish imbalance, and then you're still like, oh no, I'm gonna look for longs. You are gonna miss out, for example, on a beautiful trade like this, and the market guided you down there, okay? But for now, I'm gonna keep with the long bias because it looks pretty good, and with the weak NFP data, I would stick a little bit more to longs. But any first signs of bearishness, I'm gonna be the first one to short, okay? So that is your USD. Let's see how the others are looking like. So GBP USD kind of looks a little bit better. At least it's not stuck into a very big weekly candle here. But again, the last kind of couple of weeks, indecisive. This candle here didn't break out the previous one. This one was an inside bar. And then this week, we actually massively came in to sweep that low, and we massively rejected, okay? So this kind of gives me very bullish candle anatomy. The wick down there gives me a lot of bullish sentiment. And then we drop to the daily, which is extremely interesting right now. Why? Well, because we came in here with a very nice daily bearish imbalance. That can kind of give you a hint, okay, are we going bearish? However, you should also be looking at liquidity as well. What did the market do? Is it perfectly swept that low? Okay, and it also, what I indicated to my team, it was also tapping into what I call a reaction area. What is a reaction area? It's an old zone that was not retested, okay? Tapped into that one and then returning into the current zone, which got tapped here on Thursday. It gave us the bearishness. However, then Friday's candle completely invalidated that imbalance, because again, I have rules, and if you want to know the rules for my invalidations of the imbalances and how I trade them, Bootcamp again, link number 1 in the description, okay? And then when that imbalance fails, immediately that unlocks the liquidity on top right here, because then this push is weak. So basically, once again, we can, if the bullishness is going to prevail, we're going to drive towards that liquidity. But similar to the other pairs, I really want to see a daily bullish imbalance here, right? This imbalance is no longer relevant because it's already tapped and it's already broken and liquidity is already taken. So I wouldn't really look to short anymore from that imbalance. So definitely I would like to see a daily bullish here. But then dropping onto the forward time frame, hopefully we also get some sort of imbalance there. Yes, we do. Again, all the pairs are kind of similar right now, okay? So there's the hourly zone. So yet again, I have to give the overall similar outlook here. We either tap into that hourly time frame and we start guiding us towards the highs, target number 1 here, and then of course target number 2 is going to be that ultimate high there. And then of course scenario number 2 will be for us to consolidate a little bit and then tap into the daily and then rocket. And guess what? Scenario number 3, okay, complete invalidation of the daily, all right, hourly bearish imbalance, and then targeting the opposing side of the liquidity. Easy. So here I'm going to give you 3 scenarios. I mean, I always give 2 opposing ones, so the bullish one and the bearish one, because again, you never know what Trump is going to say over the weekend, or what the ECB or Bank of England are going to say, and how the market is going to react to that. So you should always be prepared for both sides. As usual in life, you always need to plan B, right? So that is how I think about GBP USD. However, I would say once again, EU GU, they look really good for longs, so I would prefer the long scenario. So either trading higher from that volatile zone, or waiting for a daily bullish imbalance to get formed after Monday closes, and then looking for Tuesday and Wednesday to capitalize on longs. But if I have invalidations of that volatile bullish, if I have an invalidation of the daily bullish, then I'm going to be the first one to be targeting the bearish liquidity points. So let's see how it goes. Well, AU is just not getting better. Look at that weekly time frame here. Absolute chop. And it's been in such a chop since a very long time. Like, it's making some sort of a move, but look at this. Like, compare this sort of crazy price action to that beautiful thing, right? I made a lot of profits on AU here in 2024, beginning of 2025, and then even here a little bit into 2025. But then since this thing came up, I just ditched AU out of my list because it's absolutely choppy. But of course, let's drop to the daily time frame because we can always find opportunities. Again, as you can see here, the market came into a sweep. It didn't really close below it. We have daily imbalances, but immediately these daily bearish imbalances got invalidated by a bullish one. What does that suggest? Well, that suggests that this whole bearish push here is weak. Why? Well, because this bearish push here had these bearish imbalances that failed. So right now there is nothing to stop price and push it lower. And guess what? Liquidity, bingo, right? It definitely did take some time to get in there. It came all the way on Friday. But again, if you want to learn how these things work, bootcamp, right? I promise it's amazing. So daily bullish order flow right now, tapping in, following through, and then we got another daily bullish imbalance, which is looking pretty good. But then we tapped in candle 1, 2, 3. So 3 candles kind of consolidating inside. It was just waiting for NFP, and then just NFP popped the top. Okay. Now, unlike the other pairs here, we cannot have a daily bullish imbalance. Why? Well, because the rejection is pretty big, and we're already into pretty much the invalidation line. So doesn't look very good. Okay, doesn't look very good. So let's see how the volatile time frame is gonna look like. Well, the volatile time frame looks kind of very nice. Very nice bullish structure here. And yeah, here similar to the rest, we have a volatile bullish, and we also have one just below, and even one below here. So a very strong push right there. But again, we need to see how is it going to develop. Is it going to tap into these zones and start building bullish price action? Then of course we can go higher. Looking at how it's rejecting right now, if we have any signs of a bearish imbalance here, okay, always immediately adapt. Okay, immediately adapt, because what is happening more recently is what actually matters. So two outlooks here. Okay, if we invalidate fully that imbalance, then if we come into the second one, but by the time we come into the second one, we actually have a new volatile bearish. Well, guess what? I'm going to be more short bias right now, because that could mean that this push is weak and it's not really going to follow through, especially coming after that massive sweep and not creating a new daily bullish imbalance. So this is kind of the first instrument. So EU and GU looked a little bit more bullish. This one is also looking pretty good for longs, honestly. So I would prefer the longs. However, I really don't like the sweep. That sweep right there, that massive wick is giving me a lot of information. And the volatile time frame right now, it's definitely bullish. We're tapping into the first bullishness. The 1 hourly time frame, however, you can see it's already like low, lower, high, lower, low. So starting to very slowly get bearish. We even had a 1 hourly bearish zone here that already is being respected. Okay, so in order for me to take longs, I would really need here on the 1 hourly time frame to see the market trend higher, and then I'm gonna capitalize on the trade and get my 2R into the liquidity when it's easy. Because a mistake that a lot of traders do is they try to trade from the bottom here. All right, they try to catch that move, but the best move is that one here. Why? Because the market shifted, it's showing that it wants to go higher. It's not gonna stop right there without taking that high and without taking that high and this high. And look at that, boom. Okay, so don't rush, wait for the market, wait to see where it wants to go, and then of course the closer it gets to the liquidity, the higher the probability is gonna be. This is AU. I would prefer the longs once again, but I'm also gonna be very open-minded towards any shorts. Completely different picture on NZUSD. Like, look at that. We are having a weekly bearish imbalance. It's extremely small that I can't even draw it, and we're not gonna even see the sign here, but we're having a weekly bearish imbalance, right? And a weekly order block here. Very nice that is being tapped. So this low pretty nice liquidity. Now this weekly candle pretty sketchy. Yeah, it's not the greatest because we first tapped into that weekly imbalance on a Monday and we had a beautiful flush lower. Okay, that then we could have said, okay, we're definitely gonna go lower. But then Friday came in and it stopped out all the traders that were short, which is a pretty nasty thing to do, right? Even from the weekly bearish, we had a daily bearish, and that daily bearish actually did its job, okay? Because that daily bearish tapped in and it took the liquidity. So this Thursday short here on XAUUSD, going back tested, that is a beautiful trade. Coming from a weekly bearish, creating a daily bearish and attacking the liquidity. But then Friday pretty much kind of destroyed everything. Now, again, the key question is, are we going to go higher right now? Is this weekly zone really going to fail? Okay, how are we going to know if it's going to fail? Well, either by having a daily closure above that high here, right? So the next candle should close above this high fully, okay? Or of course, you can wait for one more week to truly see that, hey, right, the market is impulsing above that, and then we can target this high. Okay, but that is a little bit for next week. So dropping onto the forward time frame, well, yeah, similar to the rest, we're having that massive bullish push here that was caused mainly by NFP, and it's giving us these massive forward bullish imbalances that kind of really shows us, all right, it's massively bullish. However, I wouldn't jump into it immediately like that. Okay, I really want to see a little bit more confirmation, because after coming into that sweep, we can very quickly shift the gears and just turn around, right? Like just how the market was looking pretty bullish right there, and then look at that, boom, massive bearish, then it pulls back into the daily imbalance, boom, massive bearish. So something similar could happen once again, but you then have to wait for all of these forward bullish imbalances to truly show you the failure, or you need to really see, for example, bearish imbalances to be created, and then all of these imbalances are literally going to be your reaction areas. So this is where you can expect for the market to pull back, right, to react, I mean, and pull back into a zone. So that is the bearish scenario. I can definitely see that happening if we kind of do get some sort of a consolidating market and not really following through bullish after that bullish push, okay? And of course, the long scenario will be, which the long scenario, I would really prefer for the market to show me, hey, I'm going higher, okay? Break above that high here, make a bullish imbalance somewhere here, then I would be very interested for longs, okay? Or of course, you can be taking longs immediately after the market opens, because we're right now tapping into a forward zone. You should be aware that, for example, the 1 hour here has a slightly opposing imbalance. So for example, if you're looking for a really fast trade, if you see first signs of failure of that 1 hourly bullish, then immediately you can drive towards the liquidity. That is going to be the fastest trade, for example, that you can take. But me personally, I always kind of wait for Mondays to pass to show me where it wants to go. So I'm giving you two scenarios right there, right? Scenario number one, the bullish side towards the highs here, and really seeing that, okay, the market has flipped, because a lot of times one push doesn't mean much, okay? So just how the market here was like, okay, we made this bullish push right there, but still behind was bearishness, but then we pulled back into the imbalance, okay? And then out of that, we started following through, right? And then, for example, if we take this trade right there, that is a high probability trade. Why? Because right now we have structure established. It's exactly the same here. We have that massive push. So again, is this really an order flow yet? No, we need to wait for a pullback, higher low formation, and then to truly see the market holding and guiding us higher, okay? So again, two scenarios. Let's watch how the market's gonna open on Monday, and then we're gonna flow with it. All right, gold diggers, congratulations on all-time highs for gold. I mean, it has been an absolutely amazing trading going into all-time highs. Unfortunately, I missed it because I was on a 1 week break with my family on a sea trip, and I missed all of these amazing setups. However, my community absolutely smashed it, right? Let me actually show you, right? Let's go to the community, and then we go to executed trades, right? And I'm just gonna sort it by gold, right? So everything is organized. Long 1.47 R, 1 R TP, 1.2 R TP, TP hit here. What's the R? I don't see, but looks pretty good. Let me just reset that because I don't like it like this, right? 1.2 R here. TP hit 2.16, little stop loss there from Q. It's okay. 1.6, 1, 2.4 R, little stop loss here from Q. He's trading a lot of Asia, so we need to work with them. 1.4 R, 1.1, 2 R, 2.6 R, 1.7 R, 1.7 R, right? And all of these 3 R here, 0.8. Of course, we always have fixed targets. Sometimes they're going to be little as 0.8, sometimes they're going to be 3, 1.2, 1.5, right? Break even, loss, break even, 2R, 1R, TP hit, right? Some losses here, but so many TPs, right? And all of these are live executed trades with proof, right? There is the proof. Every single one that I click is going to have proof attached, okay? Because I do not accept any trades that are without proof. So for example, Mark here hasn't shared the proof yet, so we're not gonna allow him, for example, to earn points for that, okay? Always proof. So absolutely killer performance for gold. Now, let's see what is going to be happening going forward. I don't know. All-time highs are always super tricky, but what we're having right now is a massive weekly bullish imbalance. By the way, a little disclaimer, I'm trading gold futures. This is the chart that I'm looking at. It's not the XAUUSD, okay? Because that is the real data for gold. This is what I'm trading. This is the most relevant and real price action. Because if you look at gold on Oanda, on Forex.com, on FXCM, it's always going to be different. While this one, this is the regulated price action. So this is the one I'm using. Massive weekly bullish imbalance, but of course we have to go to the daily time frame to refine that a little bit more. Massively amazing daily bullish imbalance here. The market tapped in and it's already taking the liquidity. So the current positioning on gold is, I am very sad to say, it's not good. All right, massively expanded, massively running away. The daily bullish imbalance already got tapped and NFP did the job. So right now we're trading a little bit too high. We're taking all-time high liquidity. We're taking this daily liquidity. So again, what I would again say is something very similar to the previous setups as well. Like if we do have a daily bullish imbalance to be created here after Monday, it could get very interesting. Okay. So then going on to the hourly time frame, we're having that hourly zone here after taking the liquidity. So that is a very interesting one. But if we actually come back to tap into that hourly zone, that is going to invalidate a new daily bullish imbalance. So pretty sketchy. Okay. Can we expect a reversal right now? I don't know. I don't think so, but we could definitely happen if we have like a shift of the sentiment. But I'm just fully bullish. I'm just fully bullish on gold, but I have really refined my gold edge to be more like a scalping approach. So I can go short, I can go long, I can go short, I can go long towards very easy and low hanging fruits during a very specific time. So honestly, I don't care that much about like the hard time frames, because every single day I'm gonna try to capitalize on the daily move, okay, by looking at the lower time frame. So again, currently it's pretty hard to say. Like I can say something like that. All right, I can say, for example, wait for a daily bullish imbalance to go long. Or of course, like the short scenario can also be very nice, because if you look at that massively weekly candle, okay, that is also potentially setting up for another weekly bullish imbalance, not daily, weekly. Okay, so imagine this week maybe slows down for a little bit, kind of prints a, let's say, a bearish candle right there. Okay, and then maybe next week we tap into a newly created weekly bullish imbalance like that, for example, and then we massively rally. So this is something that we can also expect, maybe a slower week, but we do have PPI and CPI, so maybe it's not going to be as slow. So again, everybody, unfortunately, it's not a great position right now. I cannot really say shorts, okay, because in order for me to take a short, how I would take a short is if the market taps on that volley, reacts, invalidates, bearish imbalances here, I'm immediately gonna be taking shorts towards these flat lows here. Okay, that's what I'm gonna do. However, again, if the longs prevail potentially somehow, right, I'm going to immediately be looking for the longs again, targeting new all-time highs. Now, when the market reaches all-time highs, as we're gonna also see on the index futures, it is always good to have like a little bit of a dip, okay, to have like a deeper pullback like that. All right, maybe into the weekly, and then from there to really be looking to capitalize towards the new all-time highs, because right now on all-time highs it can kind of take out the high, reverse, take out the high, reverse, and you don't have a lot of liquidity to work with. Okay, so that is gold. Unfortunately, not a great positioning, so I'm definitely going to wait for Monday to play out a little bit to kind of get a feeling of where he wants to go, what he wants to do. And the first signs that I see of the market convincing me about its direction, I'm going to be the first one to strike. So that is gold. Congratulations on all-time highs. I really did wish I had investments in gold as well, maybe some gold ETFs or physical gold, but I was more into stocks at that time. But next time it drops, I'm going to think better about it. So that is gold. Absolutely bullish bias. I am suspecting maybe a little bit of a drop because it might need it. to regain some liquidity and then potentially to go higher. So let's see. All right, let's have a look at the JPYs. Starting with UJ, well, the weekly time frame is looking pretty crazy here. Massive consolidation. So let us immediately go to the daily time frame to see if we can get some more information. Oh, god damn, like how do you trade that thing here? So the very last thing we had actually is a very nice daily bullish imbalance, and it kind of actually tapped in. It tried, but right now it's invalidating the imbalance actually, so I can immediately say liquidity here. Okay, so that I'm gonna have a little bit more of a bearish bias, especially I mean with the DXY also looking a little bit more bearish. Very likely on the 40 time frame we're gonna, oh, this is looking good by the way. Yeah, we're having that 40 bearish imbalance that is just being tapped. Before that though, so this is kind of a setup that I shot it to my community, but it was just before NFP. We're having like the market tapping into the daily, but do you see like the momentum kicking it from the daily? No. What is momentum? Imbalances. Do you see anything forming here? No. And then the market made this lower high, okay, and it gave us a sign, the first bearish sign, and then there was nothing to stop price. There was no bullish imbalance here to potentially push price higher. So then guess what? This becomes easy liquidity. Boom. Target taken. And right now what we have is we actually have structure also in our side. Lower high, and right now we can be looking for a potential lower high again into all of these flat lows. So this is kind of the first setup that it just looks pretty bearish to me. It looks pretty good. Now, can Monday consolidate to form a daily bearish imbalance? Absolutely. All right, so don't just jump into Monday first thing. Ooh, let's go short. Give it some time, but of course it can definitely happen. If I just jump immediately into the 1 hour time frame, you can see that the 1 hour time frame, when you see this, it's gonna give you a little bit of struggle because it has like all of these 1 hour bearish bullish zones. So you can wait for something like that again and then try to capitalize on a 15-minute setup right there. So that is gonna be like how I would imagine that it's gonna play out if the first thing that happens on Monday is for us to flush, right? But then of course I would like for it to potentially consolidate a little bit more, like pull back a little bit deeper, form a daily bearish imbalance, and then flush into the liquidity. Liquidity number 1, 2, and 3, okay? Keep in mind, it is a little bit of a consolidation, but still you're gonna see within consolidations, it's gonna sweep a major high, then it's gonna come and sweep some major lows, then it's gonna sweep a major high, and right now what's next? Sweep a major low, which is this low here, okay? So I'm definitely a little bit more bearish here. How it's gonna play out, I don't know. Is it gonna come in a little bit deeper right now and then potentially give us the short, or is it immediately gonna flush? I don't know, but here I'm gonna stay a little bit more one-sided, okay? Because right now it looks pretty good. It's getting very close to the major liquidity here, so I would say I'm definitely short bias. Again, is it gonna do it the first thing on Asia Open? Definitely could do that, but if not, we can focus on, for example, a New York session on Monday, or maybe potentially even taking it into Tuesday if we have a daily bearish imbalance. And as usual, everybody, right? Imagine the market comes in that volatile zone, reacts, breaks, and prints a volatile bullish imbalance. Well, target the opposing side of the liquidity. Liquidity number 1, liquidity number 2, okay? It's that easy. Don't have expectations, don't have too many biases, just always every day enjoy the market, open it, okay? Where are you guiding the market? Okay, this is where it's guiding me, that is where I'm gonna trade. It's not about being right, it's not about where the market's gonna go, it's about making money, right? And being there for the right move. Let's have a quick look at the euro yen. So weekly time frame, pretty big chop right here. I mean, we're coming into for a very massive sweep of that weekly liquidity. Coming into the daily time frame, 4 days here of a chop. We're still trading inside this Tuesday's candle, so an absolute chop. We have a daily bullish imbalance here that maybe we can reach out into, but this is a low probability imbalance, but I'm not gonna get into why it is a low probability one. Pretty big chop, and then we drop into the volatile time frame. Yeah, bearish. Then it tried to push higher. It had a bullish here, it held into the liquidity, but then it failed to follow through, so it attacked the opposing side of the liquidity, and right now we're having a very little volatile bearish here. I mean, guys, this is not a nice market. I would never recommend anybody trade GJ or EJ, but I know a lot of you guys are doing it, so I'm analyzing it. Not really shorts or longs here. I mean, I would prefer shorts for two things. I see that the longs just cannot prevail, okay? First, we had that high. On this push, the market failed to take out that high, creating a lower high. Then it makes a market structure shift pattern. Then again, it has a bearish imbalance, but it fails it with a bullish one. Okay, so we can say, okay, that high is gonna get taken. The market just took out this high and still failed to take out that one. So we're having right now 3 lower high formations that are showing me, hey, sellers are a little bit more in control. So if you do get something like that maybe, or an expansion lower into that daily imbalance, that can be nice. I mean, I was bearish bias on USD JPY, so Euro Yen can potentially push down. But keep in mind that if Euro USD is massively bullish right now, Euro JPY is gonna chop. If Euro USD is massively bullish and USD JPY is massively bearish, this is the worst time to be trading Euro Yen. Okay, because that is kind of a combination between EU and USD JPY, and if both of them are moving as they should in the opposing side, this one is gonna chop. Okay, because in order for that one to work, either one of these has to be choppy or they have to have the same direction. Okay, so EU has to go up and USD JPY has to go up in order for Euro JPY to absolutely rocket, which is why crosses to me don't make any sense. But this is my Euro Yen outlook. I just absolutely dislike this pair, but I would say short bias. All right, GJ, same story here, pretty big chop. Did we come to sweep here or is it equals? I don't know, but nothing to extract from the weekly. Dropping into the daily time frame. God damn. Yeah. Okay, we just kissed, I believe, that high here. Yeah, we went above it with one tick. Absolutely nothing on the daily. What a chop, goddamn. And then we drop to the hourly time frame. Guys, this I wouldn't even analyze this. I mean, what the hell is this doing? No imbalances whatsoever, absolutely nothing. It just takes some liquidity here. The last liquidity that was taken is that guy. No bearish imbalances. I can already say that it can go and take out that high. No, I mean, this pair just doesn't make any sense at all to me personally. Like, some of you might be absolutely destroying GBP JPY. To me, just weekly time frame absolute chop, daily time frame 0 imbalances here within the last one was here, so within the last 16 days, no imbalances. Hourly time frame, no clarity right now, right? It looks bearish, then it looks bullish, but then it fails, and then it sweeps the high, and then it sweeps the low. No idea what is going to happen here, everybody, so I'm just going to leave it like this. I don't know, and I don't care that if I don't know, because not every time you're going to have a bias, and of course, some pairs are just not giving you a clear outlook. If you go on a 5-minute time frame, and then you kind of have a strategy to capitalize on, like, I don't know, some great moves, then very good for you. But for me and for my strategy, these kind of cross pairs, they don't work amazing. Alrighty, let's have a look at the indices, starting with the S&P mini futures. So pretty much here within the last 3 weeks, we just keep pinging all-time highs, a little bit of uncertainty, but the market has been good, especially on some days. I managed to pass a prop firm evaluation with Apex this week, so not bad overall for all of these choppy weeks, but a little bit directionless right now. And as I keep saying, like, trading around all-time highs, it's always gonna be tricky. Because yeah, I mean, it kind of comes in to take out all-time highs, it flushes, then for example trading towards the new all-time high is great, then again it comes in, takes it, massive flush, then again trading into the new all-time high is great, and again right now we just took out all-time highs, and what you see also is we failed to create a new daily bullish imbalance. So then of course this to me means that we're coming from one sweep. Okay, and if there is nothing to push price higher, then this is gonna mean it's gonna seek the liquidity, which is gonna be down there. Okay, so this is a pretty big call to make. That is like a 2% drop from current price action. So I really need to see the forward time frame to start giving me a little bit more bearishness, and you can see like we have the very first sign of it. 3G 4H. The very first sign is here. Okay, and if you look closely here to the left, all right, there is nothing to stop price. Like, there is no daily bullish imbalance, there is no forward bullish imbalance. The only one is here, but that one is kind of already invalidated by this new bearish. So I am seeing a slight bit of a clue for bearishness on the indices, but I'm kind of afraid to really say it because we're absolutely bullish overall. We just keep attacking all-time highs. What I can potentially forecast maybe is a little bit of a dip. Okay, so a dip like that, because again, we took all-time highs, we dipped here. We took all-time highs, we dipped here, right? All-time highs, dip, all-time highs, dip, right? So right now we're gonna have a dip. Now, are we gonna attack all the way this ultimate liquidity? Maybe not, but for example, we have this one. right here. So you should always go for the low-hanging fruits, everybody. Like, don't be one of these traders that like take a trade like that and then just go for, like, I mean, that's a bad example, but let's say you take a trade from here, like, oh no, I'm gonna go for that low, I'm gonna go like I'm gonna go down there, I don't care, right? No, take your profit target right here. Okay, that's easy profits, and these easy profits, they stack, and suddenly, oh, I'm profitable. I made such a big percent this month, instead of like waiting for that big trade that is not gonna happen all the time. So seeing again a little bit of that bearishness, of course, that was NFP. That was the NFP kind of reaction. We had the manipulation and then a very massive drop. So again, the key question for me right now is this going to sustain? Okay, is it going to tap into that fall? Is it going to start giving me bearishness? If it does, I'm just going to keep attacking all these liquidity points. Okay, but if, for example, it comes into that fall, invalidates it, and then prints something bullish, then of course I can attack the highs. However, I'm going to say right now, I am more bearish, and I would be interested to see a little bit of a drop. So of course, it's not about what I want to see and what I'm interested in. Of course, the market doesn't care about me, but let's see. Okay, I do have a feeling that we might get a little bit of a dip. So let's see if that happens. And if we do get more confirmation that the market wants to go down again, liquidity number 1, liquidity number 2 here, and finally that low. So let's see. Interestingly, right now, the tech stocks are a little bit weaker. Some of them, like Google, are absolutely rocketing. But right now, I see Nvidia dropping, Palantir dropping. Some of these kind of more techy stocks are starting to drop. Amazon is doing great, though. Is Amazon a tech stock? I don't know. Anyway, Nasdaq is not taking all-time highs of 11th of August, right? You can see, for example, 11th of August on ES, right? Took it once, and then it made all-time highs 2 times. Nasdaq, just chopping inside. So super tricky. It came in to sweep that low here, okay, and then it massively reacted. So very, very, very tricky here. Pretty big difference between Nasdaq and ES. We're sweeping that high here, okay, and we don't have a daily bullish imbalance. So overall, pretty tricky. Dropping onto the volatile time frame again. We have a similar price action, but again, this is really not a shorting opportunity. Okay, just a single hourly bearish imbalance like that doesn't mean anything yet. Okay, just like, for example, here it didn't mean anything. Just for example, like here it didn't mean anything as well. But here, for example, when we made the bearish imbalance, we pulled back and then we started making lower highs and lower lows, then it means something. Okay, so right now, let's see, it's again tapping into the very last reaction area here. All right, so I'm very interested in giving it some time to truly evaluate, are they going to continue higher, or are they going to give us a little bit of a dip? This kind of a divergence between the S&P making an all-time high and NQ still not making anything shows me that there is some sort of a weakness within like these things. So let's see. Again, I would like to see, for example, that volatile bearish imbalance hold and really start to print new ones, because if we start getting some more bearishness, then of course we can start attacking all these liquidity points. But of course, the other scenario will be if of course not, we start getting some bullishness into the market, then it's gonna potentially go higher, and then we can attack all of these other highs, and maybe Nasdaq can reach all-time highs this week, who knows. But I have seen a little bit of a pessimism within the stocks as well that I hold as well. I even did buy a little bit more of Nvidia this week because it was dropping very nicely. I plan to buy a little bit more, so I'm seeing a little bit of a dip across the board. So this is why I kind of have a feeling that, hey, we might get a little bit of a deeper dip. So let's see if that happens. But for now, I'm just super 50-50. I'm really looking to see which side is going to take over, okay? Because same thing here, right? You get that bullish imbalance, but again, it doesn't mean much yet. We're still making lower highs, but then the market pulls back, higher low, higher high, with the new imbalance here, bingo, okay? Then you get the confirmation. So this is something that I'm looking for right now, so I'm going to be patient. Well, ES made a couple of all-time highs, Nasdaq could not, and this one is still hasn't broken like the December all-time high. So yeah, why I'm definitely behind schedule. Weekly time frame, not much. I mean, we're still inside this weekly candle here, so overall not big of a no movements. Dropping onto the daily time frame again, like, did we take out that high? No, we did not take out that high. No daily bullish imbalance. tricky. I can say this low can potentially be liquidity because we came in to sweep that high and we did not make a new imbalance. And then if the forward time frame is giving me bearish guidance, which it's also not, goddamn, these markets are tricky right now. Yeah, so it doesn't print a forward bearish imbalance. It didn't hold from the bullish one. It's coming from a sweep. I mean, I would just say across the board, I like shorts a little bit more on the indices, but it's a little bit conflicting. So in cases like this, I always give it time. Okay, let's just wait for Monday to pass. Let's wait for the market to give me a little bit more clues about where it wants to go, and then of course I'm gonna look into it when it's clear. Because why I'm right now, I would say I'm more bearish. I'm bearish towards that low, very likely. Why? Because that low is the origin of that bullish push that pulled back. It actually respected the imbalance and took out the liquidity, but then it didn't follow through higher and then it flushed. So to me, that low is weak. Okay, and if that low eventually gets taken and we have a bearish imbalance, then I'm gonna look for the next one. So that is kind of the overall setup that I see across the board for the indices, but not the best thing, because again, it's just the first bearish imbalance. That doesn't mean much yet. So I'm definitely going to be waiting for more follow through and then I'm going to strike. And finally, let's have a quick look at DAX. So this one is currently bearish. It's having a weekly bearish imbalance here. That can potentially mean this is guiding us towards that liquidity point. Dropping onto the daily time frame, a beautiful daily bearish imbalance already tapped in and already reacting on Friday. So that means that this is gonna drive us towards the lows here. So this one is shouting to me short, so already from the weekly and from the daily. Dropping on the 40 time frame, god damn, this is kind of even deserving a thumbnail right there. Yeah. Weekly bearish, daily bearish, tapping into the daily, printing a folly out of it, nothing to stop price. So to me, these lows are just here super clear. So I mean, this setup is so good that a lot of times I've spotted when a setup is so good, it tends to do something stupid, right? It might do something like that and then potentially go lower. So watch out for that. But this is just a one-sided bias. Weekly bearish, daily bearish, hourly bearish, nothing to stop price. I mean, it just looks super good for shorts. So let's see if that forward imbalance is gonna get tapped, and of course you can immediately be looking for the shorts. So that is DAX. I mean, it's looking pretty good. It also gives me a little bit more confidence about the US indices because they kind of tend to go a little bit together with DAX, so that can definitely be the case. So yeah, let's see. Bearish bias on DAX looking pretty good. Let's see if it's gonna play out bearish. All right, let's quickly recap. Now on the DXY, I am more bearish bias, but I'm either going to be looking to follow through from that hourly bearish or to form a daily bearish. Now, Euro USD and GBP USD are also looking just like the DXY, but just in reverse. Euro USD is looking pretty bullish, but again, I really need to see if it's gonna follow through. And GU as well. Both of them can be forming daily bullish imbalances for which I can wait for and then start attacking them on Tuesday. But of course, I'm always aware of the opposing outlook as well. If the short sellers take over, I'm gonna be shorting them. Aussie dollar and NZD dollar also here, I'm pretty two-sided because we have that bullish push, but we're very massively sweeping the liquidity. And if we have any invalidations of these forward bullish imbalances with bearish ones, I'm going to be shorting. But if the buyers prevail, I'm going to be longing towards the liquidity. NZD USD as well, right? Massive pop, but just sweeping a high, okay? And also we're still inside the weekly bearish imbalance. So if the forward time frame starts taking over, I'm going to be shorting. But if the buyers really kick in to create a higher low, then I'm going to be longing. Gold is in a very tricky situation right now. Kind of making all-time highs, a little bit high, sweeping a daily swing point above the all-time high. So we're either just going to continue very slowly to climb towards the highs as long as like the dollar is just, it sucks so much. Or of course, if we do get a little bit of a shift of sentiment, we can see a potential deeper pullback into, let's say, liquidity levels like that. But in order for us to do that, we need to invalidate the only forward imbalance that we have. We need to invalidate the new daily bullish imbalance, and only then we can be targeting that high. So again, I'm just going to give it some time to wait to see where it's going to guide me. USD JPY looking pretty good for shorts with this very clear target. So this is what I'm going to be focusing on. Euro JPY and GJ, absolute crap. I wouldn't really touch these pairs. And indices are very interesting because we're getting a little bit of a bearish sign here. ES is the only index that has been taking all-time highs, but after every all-time high, it tends to drop a lot. So currently, I'm kind of also expecting a little bit of a drop. Nasdaq is not taking all-time highs at all here, all right? So it's kind of having that divergence with ES as well. So Nasdaq is weaker overall. So if we do get some sort of a bearish confirmation, I will be looking to short ES and Nasdaq, and even YM, right? It's not committing into the highs. It's not really attacking these all-time highs. It's not even attacking that high. So there is still a lot of weakness in the stock market, kind of a little bit of invisible weakness. Probably a lot of those smaller companies are actually not doing as great, okay? Because these indices here are driven by like the a couple of very big companies, but of course, if the market is not really going massively higher, like on Nasdaq or YM, then some of them are still lagging behind. And DAX looking like a pretty good short setup. Very curious to see if this one is gonna play out. So let me know, traders, how you performed in the last 2 weeks. Let me know how you actually finished the month of August, right? It was a good month. Let me know how you finished. And of course, let me know what are the pairs that you're looking forward to trade into the incoming week. And with that being said, I'm gonna talk to you in the next outlook. Take care, trade safe, and see you then.